Hello traders, it's Samurai Trader here. Welcome to this short session. Just about every trading book or course will emphasize that you always want to trade with the trend, and it's great advice. The two big questions that are not usually answered or easily answered are: how do you objectively identify a trend direction, and is the trend itself in the early or late stages? What I'm about to present to you is a part of a formal presentation that I recorded a few days ago for my members of and owners of the Day Traders Fast Track program. But I just wanted to do a quick summary for the general public and for those that subscribe to my YouTube channel, just to give you a rundown and a couple of great ideas that I promise you can dramatically improve your profitability. So this session is about trading using an anchor chart, how to identify high probability trade setups. And as traders, as I've got on the slide here, we're like surfers waiting for the perfect trade. The perfect trade is when the lower and higher time frames both confirm our trade. So everything I'm about, just before we get back to the slides, I have to put the disclaimer up required by the CFTC and the United States government. If you haven't read this or visited my channel before, you'll see this up at the start of every presentation. If you haven't read it previously, please take the time to read this disclaimer. Let's now get into this. So what I've got here is a number of slides that I've just cut down a little which was part of a 1 hour presentation recording training session. So I'll quickly run through some of these and get to it very quickly, and I want to show you some charts because once again, this concept is really simple once you understand it. So we've all heard the saying, the trend is your friend. Using anchor charts ensure you are trading with the trend. Now I call them HTFs, which stands for higher time frames. So trading with the higher time frame ensures you're taking trades with the highest probability of success. If you're not currently trading in the direction of the higher time frame, I can guarantee you'll immediately improve your win-loss ratio and profitability by doing so. So using multiple time frames for day trading means it will begin with the higher time frame to help us identify the longer term trend direction. Generally speaking, you'll have two charts up. I'll show you a screenshot or two with 3 charts, but you can really effectively do this with just 2 charts. So you've got your slower time frame, which is your higher time frame, and the second chart we use is much faster, and we call this time frame the entry chart, or the EC, entry chart, because we'll be looking for an entry pattern on this chart trading in the same direction as the long-term move, preferably after a pullback or a retracement. In other words, on our slower chart, on our trading chart I should say, the EC, we want to see a pullback, and we're going to be referring then to the higher time frame. Now I like my higher time frames to be approximately 3 times higher than my actual trading chart. Now I like to trade on the ES 1000 volume, which is very fast. So typically, if I'm going to do that, if I'm going to refer to the anchor chart, I'll have a 3000 anchor chart. Many traders like to use fib numbers. So on the chart examples I'm about to show you in a moment, they're actually fib numbers. Now some traders like to use time-based charts for the higher time frame, and you might use, if you're trading a 550 tick on the ES, and I should say, the higher time frame concept works for all markets and all time frames, whether you're trading forex, stocks, or futures. So let's just say here you're trading, say, a 550 tick on the ES futures contract. You might run with, say, up to a 15-minute, a 10 to a 15-minute chart. It really depends on how fast the market is moving. I personally prefer to match. If I'm going to run with a tick chart, I'll have a higher time frame that is a tick chart. I just think it makes it easy to calculate and a whole lot of other things. So on my higher time frame chart, as you'll see in a moment, I've got a set of moving averages. So I've got an 8, 21, 34, and 89, and the 200. So what I want to know is, what are those moving averages doing? Now the comment I've got down the bottom here is, has the higher time frame had a T20 or a T20-1? Now they're trade setups that we have in the Day Traders Fast Track program. Now the highest percentage trade, and for those members perhaps haven't gone into the members area and watched the latest recording, which is much more extensive than what you're watching here, is the highest percentage trade on your higher time frame may be after a T20-1. So what I want to look at is the chart on the far right. So we can see here that I've got that black line that represents 1. So over here on the really low time frame, 1, and you can see it here as well. Now what I want to point out was, we don't have a perfect entry, because what I want to see is price action below the 8 EMA. Okay, so the blue line is my 8. I want to see price action close below, and we can see here this first signal we had, it didn't qualify, because you can see up here it looked like it was going to go through, but we can see here it went along for another 3 or 4 candles before finally it punched through. And the point here is just to be patient, just wait for the perfect setup. That's one. Point 2 over here for my members, you know, this is a T2, and it's also a T25 trade, so you've got 2 types of setups there. And so point 2 there is there, on slightly higher it's there, and on your much higher time frame it is on this candle here. What you also have, traders, is you've got a T3, so you've got a T3 on all of these charts as well, and because you've got a T3 set up on all 3 time frames, your probability of success increases dramatically. And what I've just noticed here is on the 5 charts I want to quickly show you, I've got the 3 time frames on all of them, but realistically I'd recommend you just have 2. That's mighty fine, but I just wanted, for members, I've gone into a lot more depth in the members area on this, so that's why I got these ones here. So very quickly, we're looking at the euro dollar here. Now this is the 3 range. Now I really like the 3 range on trading Forex, and then we've got the 8 range, and we've got the 13 range, much slower chart. So this is entry 1, and you can see the entry 1 signified right here, entry 2 over here, entry 3 is there, and 1, 2, and 3 are on just those 2, 3 candles over here on the shorter time frame. But what you can see, traders, is on the higher time frame, look at our EMAs. They're all in the same trend direction as our lower time frames. We're now looking at the ES 377 tick, a 610 tick, and a 1597, all fib numbers, and they don't have to be Fibonacci numbers, but a lot of our members are great followers of Fibonacci, so I've prepared these with fib numbers. So we can see here that we've got what we call a 34B and a T25. We've got a 21B and a T25 here, and over here, if we look at the black line, it's a T25. So in other words, and you had another entry up here, but that was up the top here. So here you can see here once again that price action on the higher time frame is confirming the trade on the lower time frames. We've got another scenario here where we closed below the 8. We've also got a T2 on the this is, by the way, this is the NQ55 tick. That's a 144 tick, and that's a 377, all fib numbers once again. You can see here we've got this is for members, you know what this is. This is a really nice T3, and you ended up with a T3 here, and also on the 55 tick. Now traders, I generally, if I'm trading the NQ, I trade with a 133 tick. So during New York, 55 tick in my opinion is impossible to trade. It's just too fast. I really like the 55 tick during the Globex session. Many of my members know I love trading the Globex. It's a lot slower on NQ, and particularly on the ES. You've still got some fantastic volume. So 55 tick I would not be trading during New York. I'd be doing a 133 or a 144. But the point here is the black line signifies the same entry point on all three charts. So they're all confirming the move at the same time. This one's a little different. This is the YM. So we're looking at the 55 tick, the 144 and the 377. So the same as our NQ. But we're coming off, if we look at the higher time frame, we're coming off a great T3, and it was also a T89 for my members. You've got a T20 set up on your 144, but notice how, and if you went across, and you can't see this on the 55 because we've already moved along a fair bit, but you can see here on the T20 that that it really confirms beautifully. The higher time frame is confirming this T20. So these black lines once again are all exactly the same time plot as the higher time frame. We can see the 8 EMA has changed direction. We've got fantastic angulation. You've got just so many things all pointing to take this trade.